Today, I'm taking you inside an event the world has underestimated, but one that could rewrite the rules of global finance. Between June 10th and 15th, 2025, China began shutting off the credit taps to its technology sector. A sudden, surgical, and above all, silent decision. Few headlines in the newspapers, but an impact that could affect your portfolio, no matter where you live. Why has the Chinese government decided to cut off financial oxygen to its own tech companies? Because it's afraid. Afraid of a new bubble. Of an uncontrollable explosion like the American one in 2008, but with an Asian face and a digital heart. In recent years, millions have been invested in startups with weak balance sheets, exaggerated promises, and enormous debts. Today, Beijing has said enough. This is not just regulation, it's a paradigm shift. Until yesterday, technology was the engine of China's miracle. Today, it is seen as a potential systemic risk. And beware, when a superpower decides to cut credit to its most innovative sector, it never does so by chance. What is happening in Beijing is just the beginning. Asian stock markets have already reacted. Some stocks have crashed in less than 24 hours. And this is the signal many ignore. But you won't. Because if you stay with me, in the second part, I will explain who will lose the most, who will gain the most, and how to use this crisis as a lever for your financial freedom. Now that we've seen the big picture, let's get into the details of the opportunities this crisis hides. When such an important sector freezes, it's normal for many investors to panic. But this is precisely where the real gains hide. First of all, look at foreign tech companies that don't depend on Chinese credit. Many of these businesses are strengthening their position right now, attracting investments seeking stability and innovation outside China. Investing in these stocks could be a winning strategic move in the near future. Then, there's another sector to watch: commodities. The Chinese slowdown reduces demand, but also creates volatility in prices. Those who know how to move smartly can take advantage of this instability. Finally, a practical tip: diversify your portfolio more than ever. Don't put everything into a single market or sector. The key to protecting yourself and growing lies in global diversification, which also includes less traditional assets like regulated cryptocurrencies, increasingly integrated into world financial markets. Now that you know the risks and opportunities, the most important question is, what can you do today to avoid falling behind? First, stay informed with reliable and up-to-date sources. The financial world changes quickly, and only those well-informed can make effective decisions. Follow channels, newsletters, and analysts who provide clear data without noise. Second, build a personal investment strategy. You don't need to be an expert to start, just have a clear plan and adapt it over time. Consider, with a consultant, emerging markets, foreign tech stocks, commodities, and if interested, a share of regulated cryptocurrencies. Third, be patient but decisive. Markets may seem volatile, but those with vision and discipline know how to turn every fluctuation into an opportunity for growth. Finally, remember that finance is a journey, not a race. Prepare calmly, but prepare now. Every day you lose can be a lost opportunity. Remember, every crisis hides a new opportunity. The difference between those who gain and those who lose lies in the ability to read change before others and act decisively. If you want to stay updated on these and other dynamics moving global finance, subscribe to the channel and activate the bell. Here, you'll always find up-to-date analysis and concrete strategies to protect and grow your capital.